joining us. Today's 0.25% interest rate rise will hurt thousands of families trying to buy a home. But it's nothing compared to how house prices are being driven up by foreign investors. A change to the rules has been seized upon by cashed-up foreign buyers, especially from China, to target certain suburbs in all our major cities. Linda Kincaid reports here on their suburbs of choice and what it means for anyone buying or selling a home.
In the next 5 years, the market will be dominated by Chinese buyers.
Because we have a for sale sign on Australia.
Steel, copper, coal, all sorts of commodities. They want them and they're coming here to buy them.
It's the great foreign invasion. Our homes, businesses, even our natural resources, all up for grabs.
It's definitely pushing the prices up.
Sold, congratulations.
Foreign buyers are pricing thousands of families out of their own neighbourhoods. Rain and Horn's Michael Pallier explains.
Local buyers do get frustrated. I find when they're in an auction room and they're bidding against a Chinese buyer, a lot of the time they think that they just haven't got a chance.
And they'd be right. Cashed-up foreign buyers, mainly from China, have inundated our market, many attracted by the Rudd government's decision to relax foreign ownership rules. The changes mean temporary residents can now buy established property without notifying the Foreign Investment Review Board.
The home you can see behind me sold to a Chinese family. It's located in Rose Bay in Sydney. It's sold for $17,600,000.
But don't be fooled, it's not just the top end of the market getting all the attention. Those trying to buy modest family homes have been the most affected. Agents believe prices have risen by as much as 10% because of dollars flooding in from the Orient. Such is the demand from China, agents like Nick Johnston of Melbourne's JP Dixon actively pursues buyers at Chinese property expos. We were with him in Shanghai last September when he became the first Australian agent to embark on an Oriental selling mission.
The Chinese buyers are very important to our market and we've found they've been increasing a lot over the last few years.
In October, Assistant Treasurer Senator Nick Sherry assured us that changes to foreign ownership rules were designed to have little impact.
We gave an instruction to Treasury that these simplification administration changes were not to increase the demand for and purchase of existing Australian housing stock from overseas. It hasn't done so.
But 6 months on, things aren't looking so rosy. The foreign investment watchdog is investigating 50 suspicious property purchases and is set to crack down on those buying illegally. Non-residents who are buying existing dwellings or temporary residents buying more than one home are under the gun.
The new players, not just in people wanting to live in Australia, but also to invest in Australia, are coming out of the Asian hemisphere, particularly out of China, possibly out of India.
KPMG demographer Bernard Salt knows Australia is a safe haven for wealthy overseas investors.
You make your money in China and you invest it in Australian real estate. We're safe, we're secure, we're Western, we're an overnight flight away.
So where are the Chinese buying? Real estate agents tell us the Sydney CBD and anywhere with harbour views is popular, as is Chatswood, Ryde, Macquarie Park, Homebush, Strathfield, Bankstown and Summerhill. In Melbourne, it's the school belt suburbs like Toorak, Doncaster, Bowen, North Bowen, Templestowe, Waverley, Hawthorn, Canterbury, Brighton, Kew and Camberwell. While the Brisbane suburbs of Sunnybank, New Farm and Toowong are in demand.
It's creating a new market because there's competition from the Asian buyers that wasn't necessarily there 5 or 10 years ago.
With all the interest from China, you'd be forgiven for thinking they were our #1 investors. But the most recent figures reveal it's actually the Americans. They spent nearly $12 billion on residential and commercial property between 2007 and 2008. Buyers in the United Arab Emirates are next, followed by the British, those in Singapore and then China. But expect that figure to rise.
We've been really conscious in the last 2 years that a number of major companies like Dairy Farmers and Golden Circle have been bought out totally by foreign interests.
According to AusBuy's Lynn Wilkinson, our homes are going the way of iconic Aussie companies. Now it appears even those on the land are being targeted by foreign raiders.
If they own the farms, they sell to themselves offshore, and Australia is not getting the real export dollars. We're already seeing that with buying the mineral wealth.
We do have the resources. Asia wants them. It's coming to buy them.
Perth-based business journalist Tim Treadgold says foreign investors are ploughing billions of dollars into iron ore, coal, zinc and gas projects. A Chinese company now owns half of the famous Broken Hill lead and zinc mines. Another has the second largest stake in Andrew Forrest's Fortescue Metals. And although Queensland's MacArthur Coal sounds Australian, it's controlled by Chinese, Korean and Indian investors.
We do run the risk of being overrun by foreign investment, so we do have to have strong laws and strong rules to make sure that we control what these companies do.
Currently, America is the biggest investor across our entire industry sector, spending nearly $50 billion between 2007 and 2008. And while foreign investment has its advantages, especially in terms of job creation, Bernard Salt warns
the issue is, of course, getting that balance right so that we have a reasonable balance between overseas investment in the country and Australians' investment in our own country.
Going. Sold.